right, going live. What's going on? Going live right now. All right, all right. I'm just adding you to, let me make sure y'all in there. All right, what's going on? All right, if you don't want to be wealthy, don't listen to this video. All right, that's my first thing I want to say. Welcome back to everybody. If you don't want to be wealthy, don't listen to this. All right, but today I'm going to help you to understand some things that's going on, some signs that I'm seeing. Before I came on, I actually just bought some more Bitcoin, by the way. Just saw a nice big candle on the day, the daily candle, and it's looking pretty good. RSI's headed up. I'm loving it. I'm loving it. All right. I'm going to share some things that I really believe that you should understand about the world that we live in and the economy. And I want to help you to have some financial intelligence. I want to help you to understand economic proportion, what's going on. Hey, Joy, what's up? I want to be wealthy. I know that's right. I know that's right. All right, I want to get into it. Buying Bitcoin daily. I love it. Yes, Kedrick says buying Bitcoin daily. Amen. I'm going to share a little bit about that today because I want to help you to understand some things. Again, if you don't want to become wealthy, don't educate yourself. Don't watch videos like these. But as for many of you who do, yeah, that's what we're here for. Okay. So I'm going to jump right in because there's a lot I want to say. Please it doesn't like the video. It doesn't take but a moment to do. Like if you can just take a second and like it, that would be very appreciative by me. Hey, what's going on, Ed Twine? Because it helps me, it helps the video, it helps the algorithm, it helps to push my video out to those who may need it. So please do that for me and subscribe if you have not yet, because like I said, I will be traveling and I will only be live streaming from YouTube for most of the time. All right. So, all right. Listen, the reason why I wanted to jump on is because I want to explain to you a little bit about our economy and how it works. And I want to help you to understand the setup that's going to come. And I think by the time you get to the end of this video, I promise you're going to understand it. Something's going to click and you're going to say, oh, okay, I see. Okay, I see what world we living in and what world I'm setting up for my children and my grandchildren. You're going to see it. It's going to be clear. And so I want to unravel this a little bit. And I want to talk about a couple of stocks that I bought today and why I bought them. Okay, so I want to share with you that. Again, like and subscribe. There is a situation where no matter what is happening, it seems like rich people or some people continue to get rich no matter what the economy does, while other people, it starts to become very difficult for them to maneuver. Okay. This is important because I'm going to explain to you some things about the economics. Okay. The value of your money, it's not decided in your bank account. Okay. So if you look at your bank account and you're like, okay, I got this much money or this little money, it's not decided by that. It's decided by often interest rates, inflation, and what you own when the forces start to shift. That's going to matter. I'm saying this because we do got some interest rate cuts that could possibly come. But you need to just understand the full scope of the world you live in. I promise you by the end of this, you're going to understand things. Let me make this very plain. I'm looking in the comments. I would like to invest help. Yeah, I am. Let me be very plain. When interest rates rise, and we've had some risen interest rates, the money that you'll earn in the future gets discounted. Okay. Like the Fed right now is determining how much money costs in a sense. So it's like saying, if you're in a situation where there's inflation, the money you'll earn in the future gets discounted. So it's like saying, I'll pay you $100 in 5 years. But then if the rates go up, so suddenly that promise is maybe only worth $80 today. Okay. So that's why stocks, especially tech stocks, that make their money far in the future, because I'll explain why tech stocks do what they do. And I just bought 2 tech stocks today, and I'll explain why. Sometimes they get hit hard when there's problems with rates. Okay. And it's not just numbers on Wall Street. This is also why You're looking at mortgage rates that get expensive with inflation and interest rates being high. This housing gets ridiculous. As a matter, it just gets ridiculous. And this is why people who own assets will continue to get richer, while other people get left behind. And what I want to show you is why the rates sometimes can hit stocks, housing, and even crypto. And let me just tell you right now, I'm cautiously bullish right now with crypto. I just bought some more Bitcoin before I got on, right? And a few other cryptos, to truth be told. But I also want to help you to see why gold and Bitcoin are sending rare historic signals right now. Y'all hear me? Gold and Bitcoin are sending rare historic signals right now. And I also want to address, because I keep getting a lot of people that's wondering, like, are we in a crash? Are we in a recession? What's going on with that? I want to talk about whether we're in a recession, even if, yeah, I want to talk about that. Are we in a recession? Are we not? And there's a future shift that's happening between capital and labor. And I want to help you to understand the difference. But I promise you, if it doesn't click right then and there, it will. Okay. So again, like and subscribe and visit our links in the description, because we have a community where we're there winning and helping to really hold everybody accountable to their blueprint for financial freedom. So it's amazing. It's amazing. We've been doing some amazing things. Now, first, I want to say this, because I did buy 2 tech stocks today, and there's a reason why I bought it. Now, I want you to understand the difference with tech stocks. Tech stocks are a little different sometimes, because I have to share this because tech and AI are the future, y'all. They're going to be taking y'all jobs. Okay. Tech and AI, they're the future, right? From Intel, markets will be down 15%, making this political. I don't know, a lot of people are making a lot of things political right now. My heart goes out to anybody who has to die for a reason that they shouldn't have. Like, it's just beyond me. So I actually took a moment to pray for him and his family. I'm looking at the comments where we're talking about a death. All right. So I want to talk about, first of all, a stock's value. So you can understand this. A stock's value is basically all of the cash a company will make in the future brought back to today's dollars. Okay. You got to understand what you own. When you own shares and stocks of a company, we're talking about how you're taking all the cash that a company will make in the future and you're bringing it back to today's dollars. And that's basically called discounted cash flow. So when rates go up, those future dollars start to shrink a little bit. Okay. It's like inflation eating your lunch before you sit down at the table to even get started. Okay. So sometimes tech stocks like Nvidia or Apple, or just tech stocks in general, the ones that make money decades into the future, they take the biggest hit sometimes with interest rates, because investors aren't just nervous. The math of it just kind of changes a little bit. So let me help you to understand how that works. Imagine if I offer you a deal and I say, give me $600 today and I'll give you $1,000 back in 5 years. If interest rates are 0 to 1%, then there aren't really many safe places for you to grow your money. So that deal feels pretty good. Okay, your $600 is going to turn to 1,000. But if interest rates are 5 to 6%, suddenly you think, hold on for a second. If I just put that 600 in a safe bond or something, or a savings or something else, earning 5% a year, or a certain amount a year, let's say 10 years or whatever, I already have more than $1,000 by the time that time comes. So your deal is just not that valuable anymore. Okay. Now here's the connection. And if you don't understand this, go back and watch the video. When interest rates rise, the present value of future money starts to shrink, because you could earn just as much or more with safer options today. This is going to make sense. And that's why tech stocks, they do swing very, very hard. Their big profits are far in the future. So when interest rate spikes, those future promises, they start to look less attractive compared to what's available right now. And here's where most people are also missing this, because it's not just like Wall Street nerd talk. It's not. This is why your 30-year mortgage rate, a lot of people have mortgages, is tied to a 10-year Treasury yield. When yields start to spike, that's when your monthly payments are going to jump up hundreds of dollars. It's why affordability starts to collapse, and it's why people feel like they can't get out of this place that they in. So you see the market swinging wildly is kind of tangent on the Fed speeches often. It's just math, okay? And the math, and I'll break this down. It separates the asset owners from the asset consumers. Okay. Again, this is economics. And if you don't want to be wealthy, don't learn this stuff. Okay. I know it may seem a little weird, but I promise you, I'm going to help you to understand this. I want to talk about Bitcoin and gold really quickly because this all ties in. I want you to, I'm telling you, when we bring this home, you're going to get it by the end of this. You're going to get what you need to be doing for your future. Okay. Now, let me switch gears a little bit because, again, this is about economics, and this is why you're missing the wealth transfer, okay? It's not just about tech stocks feeling the pressure from rates. It's also your house, it's gold, and it's even Bitcoin. Let's start with housing because this is showing signs. Mortgage rates move, again, with the 10-year Treasury. So when yields climb, your dream home, the home y'all want to stay in, right? It gets a lot more expensive, not because the house changed, but because the cost of borrowing did. Y'all just stick with me. And that's why affordability right now is very, very bad. Okay. And I've mentioned that. But here's the thing. Sometimes people say, well, if the rates come down, home prices will explode again. Maybe. But the other view, and I like looking at both views, y'all. The contrarian view is at best, maybe prices could crawl at, I don't know, 1 or 2% per year. At worst, we could see them fall because the moment rates ease or rate lock, let's say it like this. The moment rates ease, okay, rate locked homeowners finally start to list, and then flooding the market comes back, the inventory comes back. So more supply, more pressure, and that's not what most people are going to tell you, okay? That's the opposite side of things. We want to see it on both sides so we a little balanced. It don't matter. You can make money on either side. Now, that's the housing, the gold. Normally, when real interest rates are high, gold falls. Why? Because people would rather hold a bond that pays them something than a shiny metal that pays nothing. But here's the but, y'all. Look around. Gold is rising while real yields are high. And that's almost never the situation. It's a signal. And what it's saying is that investors don't fully trust the bond market anymore. Now, y'all got to understand the bond market because we're built on the bond market, okay? So here's what this is signaling. They're looking for safety outside the system, okay? Now, Bitcoin, same story, different flavor though. In the short run, when liquidity starts to dry up, Bitcoin gets hit. But in the long run, it moves like digital gold. Because unlike bonds or even fiat currency, like government issue currency that's not backed by physical commodity, like gold or silver, it's not like Bitcoin, it's not tied to government balance sheets. So that's why when the deficits balloon and central banks start to play their little endless cycles of printing and cutting and all of that, you know what I mean? Bitcoin becomes the hedge outside of the system. People are looking for a hedge outside of the system. So what do these 3 signals show us? 3 signals. All right, let me look in the chat. And it's going to make sense. Don't worry. It's going to make sense. The key to wealth is learning. And thank you. The key, somebody said this, and let me read it. The key to wealth is learning and understanding economics, y'all. Okay? This is a good time to invest in metals, not just gold, but silver and copper as well. And I believe that. Yes. Okay? I believe that. You should be. I would say so. I think silver is going to have its day and it's going to be good. All right. And gold. I love silver and gold. But economics. So here are the 3 signals and what they're telling us. Housing is flashing affordability stress. Gold is flashing distrust the system. Bitcoin is flashing The future of money. Most people won't connect these dots, but I'm trying to connect them for you so you can understand where we are. And in a moment, I'm going to connect another dot for you. Okay. So, are we already in a recession? Is the question. Now, let's get very honest about this, because you cannot look at the news, y'all, to tell you to trust. You're not. I'm telling y'all, even right now, there are institutions, they are quietly doing some things right behind your back while they telling you one thing. They're going to tell you one direction. They're going to tell you to buy when they selling. They're going to tell you to sell when they quietly buy it. They whispering. Okay. So they're not going to tell you certain things about the economy. Okay. And I don't know, I just don't trust it. I look at the situation and the structure. Okay. If you actually look around, it can feel a little bit like one. Let's break it down. Credit card balances, record highs, household debt stretched like never before. Jobs, we keep hearing strong labor market, jobs are bad. But you and I know people, they say it's strong. People getting laid off, hours getting cut, business closing, AI taking over. That's not strength, y'all. So why don't they call it a recession? Well, simply put, they changed the definition. If we redefine the word, then they can deny the reality. But history shows cycles like this only end two ways usually. Number one, inflation quietly eats away your money. Number two, there's some kind of like reset moment that forces the system to change, like a war or something like that, right? And resets, they're not polite. Y'all know they often look like a crisis, a conflict, something breaking. And that's when you start feeling tension because something is shifting, but it's underneath the surface. Now, here's what this means for you. If you waiting on, again, the news to tell you that it's a recession, you're already behind and all that, you don't need to look for that. You got to understand signals. And I'm not, again, if we talking definition, okay? Some people, are we in a recession? Are we not? We just talking definition. But when you understand how debt, inflation, and markets connect, you can position yourself on the winning side of the reset. Do you hear what I'm saying? And that's why even in this environment, I still investing, because while the headlines play games, wealth is not waiting. It's not. In fact, let me be very practical because I'm going to share with you two stocks that I bought today. One is Microsoft, okay? Because they're not just a software company anymore. They're like they're building the backbone of AI. If the future of AI, if there's a future of AI, Microsoft owns the roads that they run on. Let's say it like that. The second thing I bought, and there's going to be controversial for this because it hit a record high today. And I don't like buying when it's a high. I like when things fall. But I bought Google today. It don't matter. Okay. I'm a bad at the top. I know you might be thinking Google didn't hit all-time high. You're right. But I've been buying it. I was buying it when it was in the gutter. I was buying it when it was beat down and disgusted. Okay. So I'm adding because it's about positioning for me. It's the same thing with Bitcoin. Some people, like, there are some moves that I make where I sell it when the charts are, falling, and I'm like, let me exit out and then re-enter back in at a low. I don't do that with Bitcoin because I'm looking for position. I got enough trades going on left and right. There's some things I need position. Okay. And it's not to say that I wouldn't put a stop loss or whatever, it just depends on what I'm doing. But these are long-term holds for me. Okay. Google is one of them company that actually gets AI, y'all, at scale. I think they might be getting it a little more than Apple right now. Okay. Because I don't know what's going on with him. Trying to alter the prices to fix things. It's not going to work. They got to figure out something. But Google gets it. Their search dominance, their cloud, their data, all of it gives them leverage that other companies are sometimes scrambling to catch up with. So I'm not buying for today. I'm buying for the future. And I'm going to help you make sense of that. And if you understand this game, you're going to know that the best time to plant a tree was yesterday. And the second best time is right now. Okay. So here's the lesson. While most people are going to be panicking, sitting on the sidelines, arguing whether we're in a recession or not, I want y'all to know wealthy people are quietly buying. They are. And they're not being reckless with it. They're being strategic. Okay. And that's the mindset I want you to carry in the future, because in the next part, I'm going to show you something. I want to help you understand why labor, which is the thing you've been taught to depend on your entire life, is about to take second place, and why capital, your money, will work harder than any 9 to 5 ever could. I'm telling y'all, labor ain't going to get it in tomorrow. You better, listen, I'm telling y'all. Finally caught alive from the Bahamas. Hey, Tommy, I'm happy you're here. Listen, this is the most important part. Okay. Like the video, subscribe if you have not. This is the most important part. I'm about to talk to you about something, and it's going to hit home. I need you to understand the future of labor versus capital. Okay. I had to go through that to help you to understand the economic trends, the structure. People are not trusting the system anymore. Yeah, there's a lot that's going to happen. But there is a difference between labor and capital. They're going to be stretched way apart. I'm telling y'all, there's a wealth transfer taking place, and you cannot wait, because the future, hear me strongly, the future does not belong to labor. The future does not belong to labor. Do not get me wrong. Working hard is very noble, but working hard alone will not make you wealthy. And the way the world is shifted, it may not even keep you afloat. I'm telling you. Why? Because labor has limits. You have 24 hours a day. You only have one body, one brain, one paycheck. And in a world of automations, robotics, AI, labor is being replaced faster than we can retrain people. Y'all got to wake up. I need y'all to hear this. But capital, AKA money, because sometimes when you say capital versus labor, people don't know what that means. That's why I'm explaining it to you so you can get it. Capital, AKA money, doesn't sleep. Capital doesn't call in sick. Capital doesn't take vacation time. Capital multiplies. Think about it. You can grind on a job and make $1,000 a week, or you can put $100,000 into the right investment and make a 1% move that gives you the same $1,000 in a day. And that's why wealthy people have an unfair advantage. They do. Don't get mad. Just play the same game. Their money works harder than your body is going to ever work. That's what I'm trying to get y'all to understand. And here's the real danger in all of this. There's a danger in this. If you're stuck in the mindset that labor is the only path, you're going to miss the transfer. You're going to miss the transition that's already happening in our economy. The economy is tilting towards capital, and those who don't own assets are going to be left behind. It's about capital, y'all. This is why passing down assets is going to matter, because the next generation is coming, and wealth won't come from them just having a job. It's going to come from what your family already owns. If you leave debt, you're going to chain them. You're going to chain them. But if you leave assets, you're going to free them. This is why I'm passionate about this, y'all. I'm talking about your grandbabies. You're going to chain them if you don't stop spending all your money on this stuff that don't matter. Let me be practical. Every dollar you spend on a liability, your car, your clothes that you get in your endless upgrades, is a dollar that could have been working for you. And when you stack years of those choices, you're going to end up financing somebody else's empire instead of building your own. Your kids are going to suffer with the economy. It is a capital economy coming. Labor will not help them. It don't matter. So stop thinking like an employee and start thinking like an owner. Ask yourself, how can I get my money to work harder? Whatever you got to do right now, do it. Whatever labor you got to do right now, do it, because they're not going to be able to get money off of labor, y'all. They're not. I'm telling you, the future won't reward you for clocking in. They're going to have a different day. All right. The future will reward you for planting seeds of capital that will grow in your sleep. And when you get that, when you really, 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 really get that, you're going to stop chasing every dollar of labor, and you're going to start building a machine of capital that can outlive you. That's why I want y'all to get assets, because of the capital. We're going into a future of capital. Okay. I hope y'all get that. It's a capital. You're not going to be able to work. Labor is going to be secondary. People can work, that's fine. But let me tell you, I'm telling you, AI is replacing so much. People can work, but it's going to be secondary. I'm telling you, your investments are going to make more money than your labor. Do y'all get what I'm saying? This is a God thing. People won't understand. They won't. And now things are affordable. Assets are more affordable. You are going to be priced out. The institutions are getting in. They're sneaking behind your back. And when they get in, you're going to be priced out. You're not going to be able to afford it anymore. And guess what? The wealthy and those who own assets that are appreciated, they're going to be so far. It's going to be the gap is going to be so far from night to day. I'm telling y'all, I want to learn how to do this so badly. Yes. So, again, like the video, I'm here to help you to understand this. This is economics. And some people don't want to understand this, but I'm telling you, you got to wake up. The system is not slowing down for you. Labor is being replaced. Capital is compounding and the wealth gap is widening by the day. The question is, are you going to figure it out alone? Right? Or are you going to lock in? Are you going to get educated? You can visit the links. I see a couple of people. Investing is so overwhelming. It's really not. I think you may be making it overwhelming. Somebody said you are making sense and getting through to me. Yes. I'm happy that I am. And because economics is not something that's easy to explain, y'all. So that's why I'm like, okay, I know you got to have a little bit of history to understand it a little bit. Investing is overwhelming probably because you may be looking at him. I don't know what you're looking at, and maybe you're looking at option plays and stuff. Investing is just, because my heart breaks that you feel like it's overwhelming. Investing is stop spending money on a bunch of entertainment, a bunch of clothes, a bunch of shoes, a bunch of vacations. I'm not saying you can't have those things, but take a moment to just not spend money on those things and redirect them into businesses like stocks, like tech companies, ETFs, dividend stocks, cryptocurrency. Again, you know what? I didn't say this, and I want to say this so I don't get in trouble. I am not your financial advisor. I'm not telling you what to buy, hold, and sell. The information that I'm giving you is for educational purposes only. Investing is risky and you can lose everything you have. So I am saying this for educational purposes. Okay. So I'm not telling you what to buy, hold, or sell, but I'm speaking what I would do, and it's for educational purposes only. So when I say investing, I'm not talking about trading, y'all. Trading and investing is different. So I know trading can be very difficult for people. I do think people should learn the skill of trading because it makes you massive amounts of money. I just shared in the group today. And I try to share reasonable stuff. I don't want to come, be that I made $500,000. You know what I mean? Because people, first of all, they ain't gonna believe it. Second of all, it's just far from what people can make right now. But I did, talk today in my group. And we do a lot of learning together, growing together, holding each other accountable. But I did share a play that I had where I made just this morning, $500 in 15 minutes. And I screenshot it right away and I put it right away. I said, hey, look, it's 8:45. I just want y'all to see. Here's the receipts, because people don't think you can do option trades and then you can rinse and repeat again, 15 minutes. I said, I'm not done. I'm still going, for the next couple of hours. But I'm just showing you something real quick. And then I explain, and then I showed them my play and why I did what I did, my psychology behind it. Okay. And the point is not the dollar amount, even though I make it realistic. It was the framework, the psychology, the game plan. That's what people in the group are applying in their own way, and it's working. Okay. And so that's why I say the link is in the description. It's the trading. Yes, the trading definitely can be very tricky for people. But I don't think that everybody should trade, especially if you don't know what you're doing. I feel like you should be an investor. Okay, now there are investors that trade, but don't be a trader that invests. Be an investor that trades. I always talk about investing. That is just it, because guess what? Okay, you make that money from trading, then what? You could go spend it just like somebody do with a paycheck. It's just another skill set to get more money, but you got to have the heart of an investor in you. Okay, and so you got to take those gains and have a game plan with it. I don't do margins personally because I like to just I don't want to get in no trouble. I had a margin account and I closed it from years ago, and I switched over to just a cash only account. just because I don't even want to play. I don't even want to tip myself, okay, to play with margins and stuff. So it's safer to have your own cash and stuff. And then if you don't know what you're doing, people can do margins and you can make a lot more money. Let me just say that. But high risk, high reward, it's that thing. But I don't like a whole lot of risk, honestly. I don't need to play with a whole lot of risk. I have the cash, and yeah, and I don't like to lose. So I'm very minimal on risk. I'll pay more upfront to make sure that I'm not losing. Tight stop loss. Okay. I don't play risky, and I don't put hope into the market. Like, oh, I hope it changes direct. No, I trade the market. If it's going up, I trade it going up. If it's going down, I trade it going down. I don't do all of that stuff. I keep it real simple, because then it gets complicated. But I hope you all understand the economics behind this. We are going from a labor to a capital world. Back, our grandmamas, it was a labor, it was work. You work for stuff. But I'm telling y'all what I know. The link is in the description. Some people are asking how to join the group. The link is in the description. So visit the description and it'll say 90-day challenge. It'll have that in there. Ooh, I didn't even know what the margin account is. I think this is my sign to join the group. Absolutely. The link is in the description. We talk about all of that. I do help people who do do option trading. But at the heart of all of that, I'm helping people to become investors. I mean, because that's where it's all about. Okay. So the biggest wins, y'all, don't come from just having the right information. There's a lot of information out there. They come from being in the right environment. Okay. And so that's what we do. It's the culture, it's the environment, and that's what's so important. Okay. Think long-term also. Absolutely think long-term. And again, I'm not saying margins is not, margins do, some people, they do well with margins. I just don't use them. I'm going through the good advice as always. Thank you. You are so awesome. What platform do I use? I use several platforms. I use Moomoo. Mainly right now I'm using Moomoo. Robinhood. Sometimes I have accounts with all of them, to be honest. E-Trade. Some of them I use for trading and some of them I use for my long-term accounts though, but I like Moomoo for trading. I do have E-Trade, and then Webull and Robinhood. Robinhood is coming up with, Robinhood just got added to the S&P 500. I just did some amazing option plays with them. Never ever lose money, period. Chewy, I don't know if I'm saying your name right. That is the name of the game, right? That is what Warren Buffett said. It's only 2 rules to investing, and the same thing trading. Number 1, never lose money. Number 2, never lose money, period. Okay, so I don't care about no risk. I ain't, like, oh, let me give a little wiggle room for it to go down and go back up. No. I'm out. And I'll get back in. You can always get back in. There's other opportunities. And I don't live off of FOMO. I'm not fear of missing out. I'm not chasing nothing either. I just don't do that. I calm my nervous system. That you got to have a calm nervous system. Is this group for beginners as well as absolutely 100%. Trade cover calls? Yes, I do. I don't play options. I put my capital AMD, just watch it grow. Yeah, that's fine. Yeah, look at the charts. Pleaseable. I love watching my money make babies. Absolutely. Yeah. And that's what I do. I'm more long-term, that's just another way to make a little money, but I'm an investor. Do I hold AVAX? Absolutely. I hold AVAX. I love AVAX. The buy me a coffee. Oh, it doesn't link. I have to get my brown nose in. Okay. I'll fix the buy me a coffee link. I don't know why it's not working, but I'll take care of that. Do you have to set up your option trades due in opening hours? Yes, I have to look at the charts. I put my morning structure in because I'm usually trading. If I'm doing scalps, I'm doing morning structure. But I do mainly swing trades a lot because they're safer, and I do far out contracts. I do far contracts 2027. All right, I did in the video today 2027. I'll play. That doesn't mean I'm going to keep the contract. I'll do a 2027 contract, and the next day, if it's up, I don't mind cashing out and repeating. I'm okay with. I love rinse and repeat. Can make the same amount or keep doing the same thing. If it's working out, if it's got highs and lows. So I give myself time. And if I need a little more time, if you have a contract that's far out, you're gonna pay more money up front, but it's safer. And I do a lot of deep in the money. So that I don't have a lot of volatility. Okay. Again, I like keeping it safe, y'all. Okay. Um, the 1% build wealth with the sweat and tears, and 99% your thought on this. The 1% build wealth with the sweat and tears of the 99%. I'm not I'm not sure what that means, but I'll say what I think it means, which is that yes, if you have a Netflix subscription and I'm buying Netflix, or some wealthy person is buying a bunch of Netflix, then yes, you're making them rich. So yes, they're building wealth off of your decision to invest in liabilities. If you go to Walmart and you're spending money, if you're spending money on Amazon rather than owning Amazon stocks, then yes, those who decided I want to buy the company are making money from you, but they're not making that's not that. It's your responsibility. I mean, you get to choose where your money gonna go. Now, if you decide to make somebody else wealthier by constantly being a consumer and not an owner, then that's more on you than them. Okay, so I don't have nothing to do with if I'm putting money in Netflix or putting money in Amazon and Google, and people decide that they want to spend, you know, their money. I mean, that's their choice. I guess. So I don't know. You know what I mean? Um, so somebody was asking about that. The 1% build wealth on the sweat and tears of 99%. Yeah, I mean, in a sense, I guess. Well, I don't know if it's the sweat and tears of the 99%. I think it's the decisions of the 99%. Yes, they're making money because you decide not to, and you leave me more room to buy more and to make a better choice. And now you're a consumer, so you're building the business. And if you're building the business by being a consumer, then you are making me wealthy. So if you decide to drink Starbucks every day instead of invest in Starbucks or whatever that looks like, then yeah, I hope that makes sense. I hope I answered that. Can you tell me more about the NVIDIA option play? I did a 2027 call on NVIDIA when it was at I think it was at 168. No, yeah, I think it was at 168 when I bought it. I did an option play on NVIDIA, and I did it. You got to look at the charts and you got to find the entry. The 4-hour charts, you can always see where institutions are buying these options. And so I don't chase after, I just wait for the play to come to me, and I just set my little alarms and stuff. It's real easy because once the play come to me, instead of me trying to figure, once it drops and it come to me, I figure this is a good place. I look at the RSI, I look at the MACD, I look at the volume. Those are the three things I'm looking at: the MACD, the RSI, and the value. And that's what I use. And I'm looking at I go back and forth with the 4-hour chart, the day chart, the weekly chart, etc. That's why I just bought some of Bitcoin, because the day chart just printed a nice candle with nice volume, and the RSI is over 50. Okay. This may not make sense to some of y'all. Sorry. I'm speaking to those who asked me about the NVIDIA option. I like to go out far with options, but I am looking at how many people have those options. I'm looking at the delta and the theta. I don't want the theta to be more than like 4 times the delta. So I do kind of look at that when I'm thinking of leap options more than a year, or swing plays. And I don't like being too far out the money. I mean, when you're going into 2027, you can be a little bit out the money. I'll buy if NVIDIA is at 170, I'll buy a 175 strike for 2027, because basically I'm saying NVIDIA will be $175 by January in 2027, which we all know it will. Okay. But I don't, what was my delta? My delta might have been higher. I like a delta over 6, over 0.6. I like a delta over 0.6. And I like to be I don't like to be too far out the money. If NVIDIA is at 170, sometime I buy a 160 strike for a call. Because I don't like a lot of volatility. If it goes down, if it goes in the wrong direction, it's not going to be as bad, and I love giving myself time, leaps, at least 1 year out. But that doesn't mean I keep it for 1 year. I could literally, I buy 2027 call and I'll sell it today in the same day. Okay. So it's just more upfront, but it's safer. All right. Do you own real estate? Yes, I own real estate. I do work the capital in the markets, then pull the gains to buy buildings for rent. What do you think about This well, I cannot yes, you can send super chats. Absolutely. I'm trying to get your question though. I do capital in the markets, then pull the gains by buildings for rent. I don't know that full question what you're trying to ask. Yes, you can send super chats, and I try not to get too much coaching on YouTube because I don't want to get in trouble. They be having strikes, they be watching you. All right. Nothing I say is advice. I'm not telling you what to buy, hold, or sell. Everything I'm saying is for educational purposes only. But I do own real estate, and I got a nice amount in real estate. I've done fix and flips. I love fix and flips for quick money, and Airbnbs as well. How many contracts do you usually have? It depends. Sometimes it's 1, sometimes it's 5, sometimes it's 10, sometimes it's 20. It depends on how much I'm willing to spend on that contract and my game plan. So if this is something where I'm trying to take profits along the way, of course you need to have more than one contract, because you might take a profit at 20 when it gets 10%. You may take a profit at 20%, at 30%. It just depends on your game plan. Every game plan is different when buying contracts, but I have different amounts of contract. It just depends on the price point and what my budget is on this. And sometimes if it's a long-term play, I don't want to buy all my contracts right up front, because you got to understand it may go down, and then I need to start leveraging back in and dollar cost averaging. So if it drops down, if this is something that I really believe in and I got a lot of time, it's a 2027 contract, then if it starts going in the wrong direction, then I'm going to start averaging in by buying contracts at lower amounts. So I don't like just buying all upfront contracts. Now, if you're in a scalp play and you trying to go right away, then that makes sense. But if it starts going the opposite way, then you got to add on more risk if it starts to drop. Okay. So, or you either got to, if you have a call, you got to buy a put to, offset it basically. Okay. Again, this may not make sense to some of y'all. I'm answering questions for some of the people who are asking about the contracts. Oracle did jump massively yesterday. Tech is the future. Is it morally right to invest in the defense stocks as it profits from? I don't put my morals in making money in this way. I don't. Because if that be the case, you ain't everybody getting sued. Everybody done something. CEOs, they're human. They do crazy stuff. You know what I'm saying? Like, then some people get their politics involved and stuff. I don't, I'm not going to be able to invest in nothing. When you go into Walmart and when you're shopping on these, you don't know what these people are doing. You don't know you know what I'm saying? Like, you don't, but if defense stocks, Palantir is a defense stock. So if you're asking if I invest in defense stocks that profit from war, yes, because war that's something that's going to happen. I'm not the bad person because war happens. I can't necessarily as an individual stop a war from happening, but if I can make money and I can bless people and give to God's kingdom and help people and intervene and intercede with my, like, yeah, I was able to buy houses in cash and intervene on behalf of people who were in bad situations, and I felt like it was a form of intercession. I interceded because I had the capital to do it. And so I don't look at it like that. If I get money in my hands from whatever that looks like, I'm going to do the right things with it. But I own Palantir, and Palantir is a stock that profits from something like a war, or will profit from something like a war. So I guess the question is, yeah, I guess I do. But I try not to get all of my opinions, because if that be the case, these CEOs, some of them, you got to understand the type of personality that can build a big business. They got some flaws, y'all. Yeah. And I can't be assessing, well, what this person do. You know what I mean? Like, I just leave that out. That's for God to judge. Thoughts on dividend ETFs. I like dividend ETFs. I love SCHD. But I think, but I do think if you're going to be around for a long time, I'm more lean towards growth stocks. If you're going to be around 30, 40 years, because imagine how much a stock can grow in that amount of time. You know what I mean? If you invest in a growth stock. But because I like diversity, absolutely, I do dividend stocks like SGHD, for example. It's not what you invest, it's about what you do with that money. That's so true. Absolutely. All right. I just stayed after just to answer a few questions because I wanted to I don't get a chance to always do that. So going in, do I invest in the S&P 500? I do not the SPY, but I do VOO, which is very similar to SPY. That's Vanguard's version of the S&P 500. And I love it. Yeah. So That's religion that is limiting believers. Yeah. I believe that, Angie. So Thomas, no, because I like Vanguard's version a little bit better, VOO. So I don't have any SPY. I have no S&P 500 ETFs. But yeah, that's religion. And that's why I try not to do all of that, because I think people be missing out on money when they trying to put their, I keep the politics out. I don't, no, I am just keep all of that stuff out. I'm just trying to make money so I could operate in the gift of generosity and be a philanthropist and do the call of God. Okay. Like I don't have God can judge all of that. I'm not God. I'm not the Holy Spirit. They can figure that out. So yeah, so I don't get all wrapped up in that type of stuff, I guess. Now, let's be clear. If I found out somebody was drug dealing, or I don't know, got sex trafficking, like, oh, that's a boundary. Like if I know that, then yeah, I'm not gonna, I'm gonna bag up, you know what I'm saying, and listen to what God has to say about that. So, if it's an extreme, but outside of that, nah. What are your favorite dividend stocks, if you don't mind? I love SCHD. That's one of my great dividend stocks. Meta is now paying TX. I want to make sure I'm giving you the right. I'm gonna tell you one of my favorite ones, TXN. Let me make sure I'm giving the right ticker symbol though. Let me open up my account real quick. I don't mind sharing a couple of my dividend stocks that I like. And then remember, there are some growth stocks that pay dividends as well. Okay. So listen to God. Amen. Yes. Yes. Hold on one second. Where is it? Oh, it is. I was right. Okay. TXN. I love that. But these are company. All of these are not like ETF dividend stocks. Okay. So, TXN is a really good dividend stocks, but, Meta is now paying, I think even, I'm trying to see which ones I'll give. JEPQ, JEPI. I have that. JEPQ is a tech ETF. JP Morgan. So I love those as well. But one of my favorites that I tell people, because only on the psychological level, because TXN right now is like at how many? How much are they at right now? 347. Sometimes when people see large numbers like that, they're like, I don't want to. SCHD is only 2750. That's the one I tell people, because like people like to feel like they're getting ahead. You know what I mean? So that's one of my favorites. SCHD is one of my favorites. All right. Yeah. So how much money should you start with one contract? It depends on how much money you have. Somebody the other day said they had a $25 contract and they got back like 250. They did it on, I can't remember what they traded, but they wound up getting like $250 from that $25. Okay. So yeah, some of my contracts are in the thousands, again, because I pay for contracts. So you got to understand how much in a video or a contract will cost all the way into 2027 for some of these stocks. Tesla stocks are high. So it just depends. There is no, I mean, $25 you can start. But again, I'm not telling nobody what to buy, hold, or sell. This is for educational purposes only. I'm telling you what I would do. I'm not, you investing is risky. You can lose everything, but you want to learn what you do, and you want to, you can paper trade also. You can paper trade. Okay. So make sure you know that you can paper trade as well. Okay. So make sure of that. Can we look at the charts? What do you mean? Can we look at the charts? What chart are you trying to look at? You know what? And honestly, I'm on stream, y'all. I've never shared my screen before to look at the charts. Loving your channel. Thanks so much, Thomas. Thanks so much. And I did show my favorite indicators are the MACD, RSI, and value. Honestly, that's what I look at. I look at the day, the week, the daily chart. I even look at the 2-day chart. Y'all, a lot of people don't look at the 2-day chart. That's a little hack. I look at the 2-day chart, and I look at the 4-hour charts to see where institutions are buying. APH chart. Okay. Well, I'm not gonna look at the chart right now. Shoot, I'm not set up to no, I can't. Paschal, somebody's asked me to, I'm not set up to, I don't have the chart set up, and I don't have my, I have never shared my screen on here before, and I don't have it set up that way right now anyway. So I'm not looking at the chart. And I want to be very clear, guys. I'm just answering questions for people who trade. Just, they just picking my brain about my trades styles and stuff like that. But I want to be clear. I am here to help people to become investors. Okay. So this is something I do. I'm not saying that you guys should do it. Okay. I do a little bit of both: scalp trading and swing trading and leap trading. Okay. Scalp trading is same day contracts. But you got to be in and out of those, like, quick sniper. Swing trades are usually 3 months or more, and then leap trading is over a year. So I do all of it. So no, I haven't looked at the 5-year charts. Nope. I don't look at the 5-year charts. Because if I'm any type of whether it's cover card, whether it's trading, I don't need to look that far out. I look at the most I'll look at is the monthly chart. But when you're looking at the monthly chart, you're seeing back. You can go back on the monthly chart and look at that. How does paper trading help you? Because paper trading, you're trading with fake money. So it's like playing Monopoly. Yep. It's like, meaning if you lose, you don't really lose your money. Yes, it's profitable to buy small slices of stock. Absolutely. For example, what is that? 0.00. Absolutely, guys. And this is the last thing I'll say, so I don't make it too long. But yeah, yes. Okay, I'll answer these last 2 questions. The Mona Lisa. So someone asked, is it profitable to buy slices? Yes. Think about Bitcoin. Most people are not like, I'm about whole Bitcoin, or I'm about 3 Bitcoins. Okay. But because you're going to be spending over $300,000, right? So we put a little, we buy slices, right? If you got 10,000, if you got 10% of Bitcoin, 0.10, when Bitcoin doubles, yours double. Whatever your money is, it doubles. Okay. You got 50,000. Let's go to a lower number. You got 5,000 of Bitcoin double, 5,000 go to 10,000, whatever that looks like. So absolutely. Same thing with, that's the best way I can explain it, with slices. So don't be intimidated if, Netflix is over $1,000 or whatever. I haven't even looked at Netflix, but don't be intimidated, because you can, like, I'm putting $50 on Netflix. I'm putting $50 on Microsoft. Okay. I'm putting $50 on Meta. And it'll go up with your when Meta go up, when Netflix go up, when whatever go up, it'll go up. I'm putting $10 on the video. That's fine too, right? That's $10 you would have spent somewhere else. We got to redirect that money. And then somebody asked me, my niece told me about your channel. She loves your content. Oh, thank you. Tell her thank you so much for recommending me. I appreciate that so much. Hit that like button, guys. Can you go back in the same option play and add on contracts? Absolutely. Yeah. You can go back and buy them. You can buy them at lower prices, like when it dropped, because that contract will become, and that's sometimes what happens is I might buy a contract and it's like, okay, say I want to buy 10 of these. And it's like, no, I ain't gonna buy all 10 of them. I'm gonna buy 3 of them. Let me see if it's, if I want to add in. Looking at the chart, sometimes it's good to just start low and scale in, depending on, especially if you feel like you get in early and there's a retrace and things like that, you can scale in. Yeah, so you can go back and buy the same option contract. Matter of fact, I make money off the same contract over and over. If I see it go up and I cash out, and then I see it drop back to, a place, and then it starts to go back up, I jump right back in. It's called the rinse and repeat. But again, I keep my stuff very, very simple. I'm not a high risk person. I don't have a risk personality, y'all. Okay. I don't even need, sometimes I'll get out because I'm not being greedy. I don't try to be greedy. I don't care if I put my stop loss very tight. I don't care if it stops me off and go to the moon. It's always another opportunity. That's the way I look at it. I am not a big risk taker. Okay. DCA is the way. Absolutely. Do I stake my crypto for gains? I do stake a little bit, but I had unstaked all my stuff because I didn't know. I was, there was a lot of uncertainty with the tariffs and stuff like that, and I didn't want to be waiting to get my crypto, out. And some stuff I was like, dang, it's gonna take 10 days, it's gonna take this long or whatever. So I unstaked all my stuff because I was like, nah, I need access to all of this right now. And just in case. And which is so happy. I'm happy I did, because I had to come out of some positions on, when I saw that the charts was becoming temporarily bearish with crypto. I mean, XRP went from, $3.50-60 all the way down to 269, and I bought at the bottom. So I took a lot of money out and I rebought in the $2.60, $2.70, which I'm happy I did. And hey, if it came even lower, I was ready. I had some cash on hand for that. So yeah, I just stopped staking for a moment, because I just was like, no, I need to have access to move things. But I do believe in staking. It's just another way to make money off the money that you already got. And I'm all about leveraging your money. Okay. Do not despise small beginnings. Okay. I am very, very, very looking at the DeFi liquidity yield farming in crypto. I've looked at it, but I'm not moving forward at anything right now. Because I'm waiting to see what this bull run is going to look like. I'm excited about it. Well, I'm cautiously bullish, y'all. I'm cautiously. I mean, things could change. I have a lot of crypto, by the way. So yeah, guys, I am, but listen, I am not here to get you to be day traders or anything. Again, everything that I say is for educational purposes only. I'm just sharing some of my experiences. I'm not telling you what to buy, hold, or sell. Investing is risky and you can lose everything. So I'm not here to tell you what to do. Again, join the community. That's where the coaching and accountability happens. The link is in the description. I just want to set you up for success. And let me just be real. As I leave, I want to say something to you guys really quick. I don't make crazy plays. Like I've said this before. My biggest amounts of money have gone in real estate. Okay, I do not like the positions that I hold, and I hold some very great positions. I've been slowly accumulating over time, over years. Okay. And I don't always, there's times where, like in April when we had a crash, yeah, you want to load up. That's why you always have some extra cash on hand. But outside of that, I just nibble here and there. I'm like the average person. Let me tell y'all. So y'all don't think, that I don't listen. Sometimes I'll put $10 on something. I'll put $50. I'll put $100. I'll put $1,000. I'll put $5,000. I'll put $10,000. But I will put $10 too. Okay. I'll go into stock. Oh, I want to buy, I'll put 100 on it. But it's the consistency. When you're doing it, little nibbling here and there, you will look up 2-3 years, and then when it's a real correction or a crash and you do load up, you will find that like it's not that hard. It's the consistency. Y'all don't need $1 million. You need $10. I rerouted money I was spending on food to get some of the positions that I have in some of my crypto positions. And I got some large positions, but I didn't get it by like, let me drop $100,000 in here. Let me drop 500. I didn't get it like that. Now on a house, yes, I've dropped money and paid for houses in cash, right? For flips and, having to fix and flips and stuff like that. And, I own houses, with tenants and stuff like rental, but those are houses for my kids. Right. So, but when it comes to the stock market, I ain't like, I'm going all in. No, I cautiously, continually, slowly here and there. So yeah, if like, I'm like about to buy something and I think about, and I'm on Amazon or something, and it's like, this is $40. Nah, let me throw this let me put this somewhere else. It's that simple. So this not hard, y'all. Some of my major amounts that I have in stock and crypto, they did not come from like me just throwing so much money at once. It was small, little, consistent steps that I was taking to stop spending my money on liabilities and start buying assets. That's it. All right. So that's it for now. I think we're going into an hour. So listen, go back, watch the replay. I'll answer some more questions. Don't worry if I didn't get to you. I'll answer some more questions. I didn't even really see a lot of questions over here. Hey, if you're not subscribed to my YouTube, come, subscribe to me. I'll answer some more questions, and I'll continue to bring content. I'm again traveling, and I will not be streaming on the other outlets. So if you're not subscribed to my YouTube page, you're going to miss it. So please do go subscribe there. You guys have always been a blessing. Paul says one share at a time. Affordable ETFs to start with. If you want to expose to yourself to crypto, you can do IBIT. Like I said, SCHD. It's not the most affordable. They're all affordable. You can buy in slices. It's all about how much money you want to put in there. I love VTI. Okay. I love VOO also. I love QQQ. They are more expensive, but you can put as much money as you want there. But if you're just talking about, what did I just did I did something the other day. And what did I tell you guys to get? I can't remember because I always got so much stuff going, guys. I can't remember what share I mentioned some of this in my other videos. Go back. You know what? I've mentioned 3 ETFs that you can, 3 tech ETFs in my last video. Go back and watch that. Make sure you go back and watch that because I describe them. I talk about them, but it's not about if they're affordable. It doesn't matter how much they cost. However much your money is in there, that's where your money going to multiply. If it go up 20%, whatever you put in there is going to go up. You see what I'm saying? So make sure, because I'm always talking about different ETFs for different reasons. I did do VTG, FTEC on my last one, but go back and watch. Yes, I own VTI and VOO. I like both of them. So go back and watch those. I like JEPI. I do SCHD. I do JEPQ as well. I don't have QYLD. So go back and watch those and you will get a chance. I was trying to scroll through and see if I see anything. Go back and watch the videos because I did talk about the 3 tech stocks in my last video. Talked about some Vanguard tech stocks and a few other ones, Fidelity. So yeah, go back and watch that. They are really, really, really good stocks. And I break them down and I go through the numbers and everything so you can understand. AI is the future. All right. Listen, your money can either sit still or it can multiply. And guess what? The choice is up to you. I'll see y'all next time.